Month after month, year after year, the People's Bank of China is acquiring physical gold. They are executing a continuous accumulation of the metal at a pace rarely seen in modern economic history. This matches the China playbook, a methodology defined by patience and consistency. For 3 decades, Beijing used this same under-the-radar approach to build its technology sector and military infrastructure before their scale became undeniable to the world. While central banks typically buy gold to manage routine reserves, China's sustained streak represents a deliberate geopolitical repositioning. They are moving away from temporary market strategies in favor of a long-term structural shift. To maintain this pace without driving costs up, Beijing often underreports its true accumulation. Analysts tracking global trade flows believe the People's Bank acquires gold through state-owned entities that do not appear in official monthly reserve reports. This secret gold rush is the execution of a strategic plan to rewrite the global financial order, moving far beyond the scope of routine central bank management. The drive for gold stems from a specific economic vulnerability. China currently holds approximately $3 trillion in foreign exchange reserves, the largest stockpile of any nation on Earth. Most of these reserves exist only as digital entries. They are stored in U.S. Treasury bonds and routed through the American-controlled SWIFT banking network. This gives Washington a unique leverage. Because these assets live in American infrastructure, the U.S. can freeze accounts, run massive deficits, and apply global sanctions while foreign holders like China absorb the financial impact. Physical gold offers a complete defense. Gold stored inside China's own borders cannot be sanctioned by a foreign executive order, digitally confiscated, or disconnected from the global grid. For a rising power, dollar dependency is a fatal vulnerability. Accumulating physical, sovereign gold has become an existential necessity for Beijing's long-term survival. China's gradual diversification turned into an urgent priority in February 2022. Following the invasion of Ukraine, the United States and its allies moved against the Russian central bank. In a few days, Western governments froze $300 billion of Russian sovereign wealth. They demonstrated that the savings of a major world power could be made inaccessible almost instantly through administrative action. The realization in Beijing was immediate. The assumption that a nation truly owns its dollar reserves is conditional on political alignment with the United States. Without that alignment, those reserves can vanish. This turned financial weaponization into the dominant risk factor for the Chinese economy. Strategic planning shifted from long-term preference to immediate defense. The 2022 sanctions provided a live demonstration of American power, sparking a multi-front sprint in Beijing to convert digital wealth into hard, physical assets. There is a massive gap between China's official reports and the likely reality. While the central bank reports 2,280 tons, analysts estimate actual shadow reserves held by state entities and the military may exceed 6,000 tons. This strategy extends to the domestic front, the Chinese property market, where that single year of Chinese private demand accounted for approximately half of all the gold mined on Earth during the same period. By combining state-level shadow accumulation with massive citizen hoarding, China is methodically trapping the global physical gold supply permanently within its borders. This gold accumulation supports the broader BRICS project. This expanding alliance is building a financial infrastructure designed to function entirely outside of American control. A key part of this plan is the BRICS unit, a new reserve currency mechanism designed to balance international trade without the need for U.S. dollars. Physical gold is the only logical collateral for such a system. It is a neutral, non-aligned asset that can be verified by all members and controlled by none. And this creates a new power dynamic. The nation that enters this multipolar monetary system with the largest gold reserve will hold the most leverage to write the rules for everyone else. Beijing is stockpiling the foundational collateral required to launch and control the infrastructure of a post-dollar global economy, and the macroeconomic shift is already visible. The US dollar's share of global reserves dropped from 73% in 2001 to 58% today. For Americans, this means higher borrowing costs and inflation. As dollar demand falls, the US must pay more to service its debt, lowering the standard of living. There is a deep historical irony here. The United States still holds the world's largest official gold reserve, a legacy of the Bretton Woods system that America designed and then dismantled. While the U.S. has allowed its gold strategy to stagnate for decades, strategic rivals are buying with urgency. They are acquiring what America already owns but no longer seems to value. China's playbook is a multi-trillion-dollar bet that the era of pure fiat money is ending. They are preparing for that future by hoarding the one asset that has outlasted every empire in history: